Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 6th, 2025, and we're diving into Marriott's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Marriott's latest financial performance.
Let's start with a brief overview of Marriott. As a global leader in the hospitality industry, Marriott operates nearly 9,500 properties across more than 30 brands in 144 countries. Their latest earnings report has just been released, and we're here to break it down for our viewers. Revenue and profitability overview. Let's start with the top line. Marriott reported a 4.1% increase in RevPAR worldwide for the first quarter of 2025. John, how does this translate into their overall financial performance?
Marriott's RevPAR growth is a strong indicator of their revenue performance, driven by higher average daily rates and increased occupancy. This growth contributed to a reported net income of $665 million, an 18% increase year over year. Their adjusted EBITDA also rose by 7% to $1,207 million, showcasing robust profitability.
And how did they fare in terms of earnings per share?
Marriott's adjusted diluted EPS came in at 2, beating the analyst forecast of 2.27 cents. This reflects their ability to manage costs effectively and capitalize on revenue growth despite macroeconomic uncertainties.
Operational efficiencies and strategic initiatives. Marriott has been active in expanding its portfolio. Can you tell us more about their operational efficiencies and strategic initiatives?
Absolutely. Marriott added approximately 12,200 net rooms during the quarter, with a development pipeline of 3,800 properties. This expansion is part of their strategy to grow their global footprint. Additionally, they repurchased 2.8 million shares for $0.8 billion, returning significant value to shareholders.
They also announced an acquisition. What can you tell us about that?
Marriott has reached an agreement to acquire the citizenM brand, which is an innovative lifestyle lodging offering. This acquisition is expected to enhance their select service segment and drive future growth, particularly in international markets.
Financial metrics and market outlook. Let's delve into some of the financial metrics. How did Marriott's management and franchise fees perform?
Base management and franchise fees increased by 7% to $1,071 million, driven by RevPAR increases and unit growth. This is a positive sign of Marriott's ability to generate revenue from its core operations.
What about their interest expenses and tax provisions?
Interest expenses rose to $183 million due to higher debt balances. However, the provision for income taxes was $99 million, benefiting from an $86 million favorable impact from the release of certain tax reserves. This helped improve their net income.
And looking ahead, what is their outlook for net rooms growth?
Marriott expects their full year 2025 net rooms growth to approach 5%, assuming the citizenM acquisition closes before year-end. This aligns with their strategy to expand their global portfolio and enhance offerings for guests and loyalty program members.
Key takeaways. In summary, Marriott has delivered a strong performance in the first quarter of 2025 with impressive revenue growth and profitability. Their strategic initiatives, including the acquisition of the citizenM brand, position them well for future growth. John, any final thoughts on Marriott's investment prospects?
Marriott's robust financial performance and strategic expansion efforts make it an attractive investment opportunity. Their focus on enhancing their global portfolio and loyalty program should drive long-term growth. Investors should keep an eye on their execution of these strategies.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Marriott's performance in the comments below. Until next time.